BIS Commodities. Taking a look at the markets in review this Friday. Let's start out and just see where we are for the week for some of the major ag commodities. Taking a look at corn, we have September corn down a little over 31 cents this week at 378 for the final close. On to December, we were down just under 31 cents for the week at 384 3/4 in the December contract. August beans were down a little over a buck 4 to be exact, at 11.95 3/4. November beans down 58 cents on the week at 10.75. Sep wheat down 53.5 cents at 5.26. August cattle closed $5.65 lower at 149.35, and July hogs closed a buck higher on the week, the only winner on the week, at 132.72. The ag commodities, as I mentioned, as a whole took a little bit of a knock on the chin this week. The commodity index, which is a measurement of commodity baskets, was down significantly on the week too. It is heavily weighted with the energies, and we did see, or we are looking to see, energies close lower on the week as well. So a rough week on most commodities. The equities do look to close a little bit weaker this week as well. Taking a look at the livestock market. A lot of fireworks, a lot of negativity in the futures market this week. We did see cattle sell down hard. A couple limit down days in the feeder cattle this week as well. When you take so it felt as if it was purely a money flow thing, where we've seen 3 days starting on Wednesday, Thursday, and today, where we did see some heavy selling come into play, only to see the futures rally in the last hour of trade today, specifically in the last half-hour trade or so today, where we were able to rally cattle, and we've seen the front end close a little bit higher, a buck higher in the August, and feeders were able to come back to unchanged. So a wild week with the futures. The cash this week, we did see cash trade $1 to $2 lower in general on the week, and this did occur after the break on Wednesday. So we didn't see quite as a negative week in the cash market. Another measurement of the meats out there, the box beef values were strong, or held their values all week, down a little bit today, but the choice cutout looks to close at 251 or plus 251 on the week. Weekly exports were solid, very good for beef this week as well. Will be interesting to see if we see a little bit of follow through on momentum with the late strength today into Monday or not. Pork ground higher on the week. We've seen the cutout and cash both continue their steady grind higher. As I mentioned, July futures were up a buck on the week. The July is the high month, of the lead month. We are seeing the deferreds mixed this week, as there was a lot of spreading going on in the deferred contracts. But the weights continue to help offset the lower numbers. We did kill less hogs this week, or it looks as if the slaughter is going to be less this week than last week. Carcass weights 10 to 12 pounds heavier, continuing to see heavier kills to help offset that. The weekly exports were a little disappointing this week in the pork trade. Over into the grain markets, the biggest thing this week was obviously the monthly supply and demand report, which came out at 11 o'clock today, and that follows up last week's acreage and stocks report. We did see a bearish reaction to that last week, and we're seeing a bearish reaction today to the release of this report. When the report came out today, it wasn't that far offline, so it still gave a green light to liquidate some length or continue to sell this thing. But when we take a look at old crop stocks, we've seen corn come in at 1.2 billion bushels for old crop, 1.246 to be exact. That's up roughly 100 million bushels from last month, and it's pretty close in line with what the average trade was expecting this week. We did see a drop off in feed usage to help see that bump up from the quarterly stocks report last month. And also we did see the last week's numbers, acres numbers come into play. But needless to say, it wasn't a shocker as far as old crop corn stocks. We did bring that little bit larger carry out in the new crop, and that's basically all we did was bump that new crop from 1.726 billion bushels last month up to 1.8 billion bushels this month due to the increase of the old crop stocks. The trade did not change the yields in this report, and that was a question. Historically, we don't see a change in the yield estimates in the July contracts. They don't start coming into play to the August when some field samples or surveys can be placed. So that was the big question mark coming forward. But even though we didn't increase the yield in this report, the trade is still trading a higher yield than the 165 estimate that's still on the balance sheet. Rolling over into beans, the bean balance sheet was going to be the more interesting one this week, following up last week's larger than expected quarterly stocks. It was interesting to see how we were going to work this balance sheet, and we did come in at 140 million bushel carryout. That is a little bit of a surprise to the trade. We were 125 million last month. The trade was expecting somewhere around that 125, maybe a little bit more, due to the increase of the quarterly stocks. But basically what the trade did was continue to increase their crush, increase their demand, but they offset that with a negative 69 million bushels residual. Basically what they're telling us is that at this point that they underestimated last year's bean crop by 69 million bushels. So in working those balance sheets, we were able to come up with a little bit larger carryout than expected. That certainly weighed on the front end of beans today, old crop beans, and that's why we've seen the August sell-off as hard as it did today, more so than the new crop. Take that carryout and you put it in the next year's balance sheet. Take that 140 million. We did see a bump up in new crop beans as well. We came in at 415 million bushels. That's up from last month's 325. But not only is it increasing the bump in the old crop stocks, it's also increasing the acres, where we found little over 3 million acres in last week's acreage report. We did leave the yield alone in the beans as well at 45.2 bushels. The trade is trading a number higher than that at this point, because if you take a look at last year's, with the 69 million bushels of last year's yield, we're looking at just shy of a bushel increase. So a little bit of head scratching, and I think the trade is probably trading a stronger number than the 45 bushels an acre right now as well. So the trade is expecting, depending on weather at this point, to see an increase in production estimates in the following month's report, and that's really what we're boiling ourselves down to. The managed money that can drive this thing has been long, has liquidated much of their length. We'll get a commitment to traders report out later today. It's expected to see that fund length in corn just about diminished, and probably maybe a little bit to the short side on beans. Again, we'll know more about that later. But weather is the main key at this point. When you take a look at the 6 to 10 day forecast, we're looking at below normal temps, and when you look at the 8 to 14 day forecast, we're looking at below normal temps, and then we're looking at the chances of rain coming in periodically over the next several weeks, and chances do look to increase, although one must be hesitant looking 2 weeks out. But at this point, you can paint a pretty decent weather scenario through the end of July, and as you approach August, it's going to be primarily grain fill on the corn, and we're all aware that the August rains make or break a bean crop. So keep your eye on the weather. Reward any type of rally. The market is extremely oversold at this point. We are due for some type of short correction, short covering bounce of some sort. Certainly take a look at those opportunities if they do materialize. If you have any questions about these or any of their markets, please feel free to give us a call here at BIS Commodities at 1-800-373-2525, or check us out on the web at biscommodities.com.